Hello everyone, welcome to my YouTube channel. André Cardoso here. Thank you very much for being here. As always, it's a pleasure for me to share my insights with you and to get your feedback. For those who are not following on Twitter, I will leave my link below, and I hope you enjoy my previous video. I forgot to leave there my profile link, but I will leave that today. So I will put that link below on the description if you want to contact me for any reason regarding those advanced pattern formations. So please do that. So for today I want to update some of those charts that I shared with our community my last video, and finally some of those patterns. What a nice week we had trading those markets, and specifically those patterns that I showed you before. So let's try to let's update some of those, or let me try to share my views for some of those. So the cable, I shared that bearish bat pattern in the last video. We were already trading that daily fractal support, so we were trading at 127.62, basically forming already that correction, and eventually already with a daily fractal. I can't remember at this point, but I believe we had already the daily fractal printed above at 1300, I believe, and then a new low, well, basically sinking into the default target for that bearish bat pattern. So that pattern printed above, now trading the default 38% Fibonacci retracement level. So that's what's the default expectations for the pattern, and as we can see, the market has fulfilled that expectation. So from here, I always suggest to break even your trade and start to partitioning your position size. If you shorted the market with 10,000, or it doesn't matter, 2 units, you close 1 unit and keep the other one, or try to hold the small portion of the remainings. Well, that's my opinion, but specifically a break even, it's important, because if the market decides to bounce into those levels again, it may threat more upside momentum, and we don't need to expose ourselves on those. If that happens, we don't need to be exposed at that price level. This may act as a false breakout below the daily fractal. We will see. That will be confirmed if the price decides to violate again above that daily resistance. So if the price decides to break that fractal, that will confirm a false breakout above the daily fractal. So stay tuned with that possibility, a bounce from this price level and eventually a breakout above. And if that happens, we already know the 168 extension, 132.52, that should be where the market will find the next pressure zone, that golden Fibonacci and reversal Fibonacci extension level. So that may put some pressure on the cable. Well, and that may suggest, as you can see, let's say a retest of this previous structure support trend line, holding those lows, and eventually acting as a resistance. So if the market decides to approach that level, you should pay attention to another retracement from those levels. And obviously, as always, if that happens, we will expect the 50% Fibonacci retracement as a default target for that shark pattern, which will produce, or will form the bullish 5-0 sequence at 50% Fibonacci retracement. So the bearish shark pattern at the golden Fibonacci extension, and then the retracement to the 50% Fib, completing the sequence, which may produce another bounce from this price level. So the bearish shark pattern, it's not necessarily a reversal behavior. It may happen, it can happen, the price to find nice resistance there and then sink again into new lows, but sometimes and as we can see, there is also a bullish sequence at the default target for the shark pattern, and if that happens, we should not be surprised with the eventual retest of the fractals above. But for now, let's stay tuned into one potential or eventual false breakout below the daily fractal, which will be confirmed above the daily fractal resistance. So it may take some time for that to happen. If that is the objective, we never know if that is the objective. The market can, as I said before, sink into those other Fibonacci levels below. Euro versus dollar. I shared that head and shoulders above. Let me try to draw that again. Something like the left shoulder, and at that time we were trading the right shoulder, so I also projected a pattern above, a retest of the weekly fractal at that point. At some point I started to project the eventual retests of that fractal resistance there, but with that edge and shoulders already, with that eventual right shoulder already formed, so we just needed to wait for a breakout of the previous structure support and the daily fractal support at 117.52. That was the daily fractal support and the next zone for the heads and shoulders, and default target for that pattern, suggesting, as I said before, the one approach to the monthly fractal resistance from March. So as you know, I start to search immediately for potential pressure zones as soon as the market starts to break below specific price zones. I need to understand where the market may find some pressure. If you are shorting, you need to understand where the market may find some pressure in order to start to partitioning your trade and eventually to break even, or even to jump out of your trades if that is the point at some point or at some moment. But as you can see, we have two different levels here. The 168 extension, at this point it makes no real sense, because, well, I prefer to wait for one approach to this previous structure fractal resistance, and the 224% Fibonacci extension will offer me that possibility and eventually a better risk reward if I want to try to go long again with euro versus dollar. If I need to go long again, I need to wait for the rejection of this structure and eventually the rejection of these of these previous structure highs also. So one approach to this cluster zone or this price zone may offer a bounce, and if that happens, that may offer also a nice risk reward, or at least a better one than pushing a trade from the middle or from no man's land. No, it's actually, there's nothing there converging with that Fibonacci extension level. So at some point it may happen. Of course, the price can find some pressure there. It's not the first time the price will nail that Fibonacci extension level and then it will bounce. But in my opinion, if I need to search for, in my opinion, a better opportunity in terms of risk reward, I prefer to see a rejection of those highs and then prepare my position to go long again. But on my previous video, you will see we were trading this right shoulder, and I was suggesting that the violation of that structure. The same for the Australian dollar, with a nice edge and shoulders there, inverted edge and shoulders, and then followed by another kind of edge and shoulders. And we are now trading again the monthly fractal. As you can see, Australian dollar already threatening that monthly fractal resistance, and euro dollar a few points above that fractal, so it needs to sink even more to achieve the same fractal. Of course, on a daily, I still aiming that 38% Fibonacci retracement 66.86, so that will confirm the sequence for the bearish alt-bat pattern printed at 113% Fibonacci extension, default target projected at 38% Fibonacci retracement level. We are now approaching the 23% Fibonacci, the very first level of Fibonacci, which is not relevant for that specific pattern, so I need to wait for that sequence to complete. And of course, we are threatening the monthly fractal. No one will assure you that the market will find support there, or the market will violate that structure. We have also the 200 moving average pointing at 67.72, so one approach to that daily moving average will not be a surprise, and eventually achieving those default targets at 38% Fibonacci retracement. The same for the Kiwi. I showed you before, we were threatening the breakout of this trend line support. We are already trading 200% Fibonacci extension on a lower time frame. I'm sorry. We are already trading this bullish shark pattern, so this is the very last shark pattern. As you know, I search for pressure zones between the 161, and then if the price decides to ignore that level, I will search for that 224% Fibonacci as another pressure level. So this is my last, or the shark pattern last chance to bounce. I call your attention to these weekly fractal supports. Obviously, breaking below the daily support, usually the market will search for the next one. And of course, since we are trading the previous structure lows and the entire structure, if I hide all of those draws, I will not be surprised to see this structure as the left shoulder, and we will have similar structure, inverted structure here as the right shoulder. So I will not be surprised to see the Kiwi at some point finding some support eventually between those ranges between previous structure closes and the lower lows, and eventually even a lower low below those previous structure support levels, and then a bounce or kind of a correction, and we don't know how long it will take, but if that happens, we may look into these as a higher degree, let's call a higher degree edge and shoulders formation, and that may put the price trading below 63, 62. So let's pay attention to that. But for now, we are approaching those previous structure support levels, the weekly fractal. Attention, because that there's a technical double top there, as I showed you before. So the projection for the technical double top, that projection will put the price trading below that fractal support. So that's the reason why I'm saying one next zone reinforced that, and then let's try to draw that something like a reinforcement of a next zone, or a retest and a rejection of that weekly fractal support, and then some type of correction inverted with the left shoulder structure. I'm just suggesting. I'm not saying that's what I'm expecting. I never expect something like that, because I need to wait, in fact, for the market to form that structure. But that's not impossible to see, and the point is, it's not impossible to see a reinforcement of this structure support, and then one major left shoulder, the head, the neck zone, one right shoulder, and then we will target lower prices from there. Okay. As I said before, on a daily, the default target for the bearish pattern, 38% fib, 62.90. So that will be the default or a minimum expectation for that bearish bat pattern. The Kiwi, Australian dollar versus the New Zealand. Well, here we are again threatening the previous structure support. In the meanwhile, after my last video, we have formed this structure resistance here. So this is already our most recent 4 hours fractal. We have a fractal support here, and I believe our daily fractal is here already. So basically we have a new fractal support below the daily fractal, and we are threatening again, exactly, and we are threatening again the daily support level. Nice cluster there, nice support. Let's see if the price will keep respecting those lows or not. I shared with you the symmetrical projection for one ABCD pattern. So a symmetrical ABCD pattern will put the price as 0707. So I will not be surprised to see the price trading even lower. And as I told you before, and because we are breaking this major or long-term ascending structure trendline support, I will not be surprised to see even more downside momentum. The Fibonacci ratios and the variables, 10707, that will complete the default ABCD pattern as a symmetrical ABCD pattern. So CHF, I shared this eventual symmetry after the bullish 2618 trade setup. For those who don't know what is that setup, I believe I have some videos there with that with those variables and the criteria that I use to identify those technical double tops and double bottoms and the bullish 2618. So this was completely expected based on the pattern the market has formed. The bullish 2618, golden Fibonacci as support, and the symmetry projected at 92.52. So we are also approaching, as some of you may be familiar already, we are approaching the bearish crab pattern territory. We don't know if the price will respect that level or not, but what is certain is the variables are there, the Fibonacci criteria are there, and that being said, we are approaching that pattern completion point. The default target for the edge and shoulders, we can see this as an inverted edge and shoulders. Actually, I have here my left shoulder, the head, and that golden Fibonacci actually as a support for the right shoulder. A default projection for that pattern will put the price a few points above that 38% Fibonacci retracement level, which is, as I told you before, the default target for that major pattern printed below at 113% Fib. So that pattern was projected since the market violated this previous structure support level. As soon as the price violates this structure, I started to project patterns at 88% Fib, and then if the price decides to reject that level or to ignore that level, which was the case, the 113% Fibonacci extension as the alt bat pattern. As you can see, the market has formed then later a double bottom, and double bottom followed by the golden Fibonacci retracement, forming the bullish 2618 trade setup, as I mentioned before. ABCD pattern expected as a default projection for the 2618 trade setup, and as I said before, we are now approaching the crab with default targets for the inverted edge and shoulders a few points above that 38% Fibonacci extension level. The Canadian dollar also trading, giving sequence to the inverted edge and shoulders. to the bullish bat pattern printed at 88% fib, and also the symmetry between these very last swings after breaking below this sideways or this triangle there. So a breakout of that triangle with the symmetry, with the price finding some support there, forming the bullish bat pattern at 88% fib. The default target for that major bullish bat pattern, as I said before, 136.35, so suggesting the retest of that weekly fractal, but we are also trading the 38% Fibonacci retracement from this symmetry, so basically a retracement from all this structure, and we are now facing that 38% fib converging with one ascending trend line from a parallel structure. It can change, we need to wait to see what type of structure the price will build or will form, but at least in my view at this point, I see this as a potential parallel structure, and the price is already actually threatening that trend line. 200% Fibonacci extension, just a few points above the default target for the inverted head and shoulders, but of course major bullish bat pattern projection, suggesting that the retest of that weekly, or at least one approach to that weekly fractal resistance above. Let's see what will happen from here, and let's see what will happen here at the trend line resistance. Norwegian krone, the same thing, bullish, minor bullish crab pattern at 168 extension, later supported by one eventual inverted head and shoulders, which has been triggered in the meanwhile. Golden Fibonacci extension I shared before as a potential pressure zone. We had a small and very limited retracement here, or a small pressure from the golden Fibonacci extension, but not enough to produce the default expectation for that for the shark pattern once printed at the golden Fibonacci extension level. And we are now, as projected before, at 958.45. We are now trading the 224% Fibonacci extension, also another variable for the bearish shark pattern. Left shoulder, head, right shoulder, default projection for the pattern for the inverted edge and shoulders, also a few points above, projected before at 963.53. So we are approaching that price zone. Weekly fractal 81.19. Let's see. Mexican peso, bullish convergence between bullish shark pattern and bullish crab pattern, or bullish butterfly pattern, I'm sorry. The convergence between those patterns forcing the recovery of the monthly fractal support. That being said, that was the strength of the Mexican peso, achieving the default targets for the butterfly pattern, the 38% fib, and then later the second target at the golden Fibonacci retracement level. And I set this trend line, or I put this trend line here. The market felt some small pressure there on the lower time frame. I saw the potential for eventual a trend line there, but major target almost there at 2272, the 38% Fibonacci retracement level for the shark pattern. As you know, by default, the shark pattern tends to search for the 50% fib, but well, that was we are now approaching or very close to the 38% Fibonacci retracement level, with the most recent highs at 701. right below the 38% fib. So let's not get surprised if the price decides to stop there and to start to move sideways, or even a retracement, even if limited, a retracement from that price zone and weekly fractal resistance. The dollar versus the yen, the crab pattern, another one that I shared with you. 160 extension, inverted head and shoulders, which has triggered more upside momentum, and we are now trading the 224% Fibonacci extension and approaching the 200 moving average on a 2 hours time frame chart. There's also the 200% Fibonacci extension as the default target for the inverted head and shoulders. Let's see how the dollar versus the yen will react from here. Euro versus yen, the head and shoulders. I shared this chart with you, and I mentioned it before. I did publish this chart on TradingView it's not a live chart, but you can trace this pattern, pressing this play or pressing this option to load new bars, and you will see the result after I publish these charts, and the violation below the next zone, so and moving towards the default expectation for the pattern. So basically we are already trading very close to those levels, but we are also moving sideways above that 224% Fibonacci extension, which completes the bullish shark pattern. So I will not be surprised to see a bounce from this price zone. We have a clear structure here. You need to wait if you want to short that market below this daily fractal. It's an option. There's a weekly fractal below. I will not be surprised to see a retest of that structure again. But if the market decides to break above, if you decide to take longs above, it may also make sense if you want to get involved. Default targets for the pattern: 38% Fibonacci position there at 124.26, but the default target a few points above the 50% Fibonacci retracement level, 124.79. Let's see how the euro versus the yen will react. Pound versus the yen, I shared this 50% Fibonacci retracement as another Fibonacci level, and as another potential pressure zone below the 38% fib, as we started to see the market violating that 38% fib. So as we can see, we still trading these Fibonacci levels. I shared with you the possibility to see the retest or the approach, one approach to the monthly fractal support position there. So don't be surprised to see cable versus the yen sinking even harder from there, unless a recover of the daily or the 200 moving average approaching from above. So now it may act as a resistance now. So the recover of that moving average may also trigger more upside momentum. So we need to pay attention to that. Australian dollar versus the yen. Now approaching, also breaking the one major ascending trend line support. I don't have that trend line here. I don't know why. Let me change my time frame. No, somehow I removed that trend line, but you can make the point there. Breakout below that trend line, breakout or the recovery of the monthly fractal resistance also, and then the violation of the weekly fractal support. There was limited support and 4 hours fractal support printed above at 75.26, but the market is already synced into these, or approaching the golden Fibonacci extension, and this is the completion point for the bullish crab pattern. So basically we are approaching that level, and also trading the very first Fibonacci level there, 23% Fibonacci retracement level from these previous structure lows and monthly fractal support. So there's a retracement here, golden fib, the 50%, the 38% fib, and we are now trading the 200 moving average and the 23% Fibonacci retracement level. As I said before, I will not be surprised to see this acting as one potential inverted edge and shoulders, which may trigger upside momentum above the previous structure highs, but we need to wait for that to happen, because trading above that weekly fractal resistance may trigger the inverted head and shoulders. For now, we are approaching, as I said, the eventual crab pattern at the golden Fibonacci extension, similar to the New Zealand versus the yen, but this one already trading beyond the deep crab pattern, the completion point, which was projected at 69.02, the 168 extension there. There was initially one Gartley pattern projected at 69.28, the Gartley, one eventual Gartley pattern there. Actually, not a Gartley pattern, let me just correct this. This is exactly the Gartley pattern, but a major one. Correct. 127 extension. As we can see, the market has ignored that Fibonacci extension level, sinking into new lows below the weekly fractal. So we are threatening that weekly fractal support level. Deep crab pattern was projected inside. Oops, I think I removed something that I don't want. Deep crab pattern projected at 168 extension, the red Fibonacci level there, 69.02, and another one it seems like ignored at this point, with the market now trading below that weekly fractal. On a higher time frame, as I shared also with you, 88% Fibonacci finally was reached there, as we can see. I projected these as soon as the price approaches that Fibonacci. I shared these as a potential bearish pattern, because we never know if the market decides to sink immediately from just a few points below the completion point. But what is certain at this point is the market has somehow found resistance, the weekly fractal. It has formed a weekly fractal at the 88% fib, finally completing the default criteria and variables for the bearish pattern, and since then the market has decided to fall and breaking the trend line support, or one eventual trend line support, and then sinking into these, or recently sinking into this weekly fractal support there. So the default target for that bat pattern that requires a few more points below that weekly fractal. So basically the 67.21, 38% Fibonacci retracement. So the New Zealand versus the yen eventually giving sequence to this bearish bat pattern. The Canadian dollar versus the yen also approaching one. Also, actually, for now we can face this as a potential technical double top. I have already shared with you the conditions and the criteria that I search for the technical double bottom, and for now we have those criteria here between the V shape between those bottoms, and the second bottom until now, or for now, rejecting to close below the previous closes of the first top, or the first bottom, I'm sorry. We are also facing the 78% fib, so a technical double bottom at this major Fibonacci retracement level. It can be significant, because if the price decides to validate that double top, that may force a recovery of the most recent losses, and eventually searching for those default expectations and targets for the pattern. 38% Fibonacci retracement there. So let's wait and see. Also the Canadian dollar also trading below one ascending trend line support. We can see that trend line between these highs from May, and then supported again last July, I believe, the last day of July, and then finally the market violating this potential trend line and now heading south. But there's also another one eventual major trend line for potential structure, so we will not ignore these major and potential trend line approaching that weekly fractal. So let's wait for that possibility. Also, let's not ignore that possibility, but we are now facing that crab pattern projected before, a few points above the recent lows. Euro versus the pound, nothing very specific, with the market failing some of my default expectations. I was expecting a retest of this fractal, then the market decides to find some resistance at this trend line. So basically simple structure here, a parallel between the previous structure highs, the most recent highs, and the previous structure support level. So we're still threatening this descending, one eventual descending structure. Let's wait and see. I'm not so convinced I'm not comfortable with euro versus cable at this point. Euro versus Australian dollar, nice bounce from the daily fractal below and a violation of the daily resistance above. Once we approach this Fibonacci extension level, I shared this chart. Okay, we are approaching also one potential trend line resistance and the weekly fractal resistance as an horizontal support line there, as an horizontal resistance, I'm sorry. And then the 224% Fibonacci extension projected above. So that will be the last, let's say, the last resource price data for the shark pattern to work. If the market decides to retrace from those levels, that will be the last shark pattern, or the last bearish shark pattern for the bears to engage and to get involved. No, so let's see if the bears will fight the sharks or not. Euro versus the New Zealand, another one with a very nice bounce from that daily and weekly fractal. Let me show you this on a 1 hour time frame. I was expecting the formation of that shark pattern at 224% fib. All the market variables and the Fibonacci criteria presented suggesting the pattern, the completion of the pattern at those Fibonacci levels. But as you can see, the market has formed a new fractal just a few points above the default or the 224% Fibonacci extension, the completion point, as expected. So we are now trading, as we can see, another one, very similar market behaviors, with a false breakout above, extended below the 224, and again a false breakout below, extended above 224, daily fractal. We should not be surprised with a retracement to those levels, 177 and eventually 176, and the previous structure fractal resistance. pound versus the Australian dollar also approaching the bearish pattern. I believe this is common sense for everyone. It's a simple pattern, a W in this case, a W shape, 88% Fibonacci. Some of those criteria also there forming, not yet, because the market is not yet trading the 88% Fib. Let's wait for that to happen. If that is the point, eventually new highs above the most recent ones, eventual trend line resistance. Let's wait and see what will happen here. Now versus the New Zealand, one approach to the golden Fibonacci extension shared before as a potential bearish shark pattern. Some pressure has been felt there since the market has found the most recent resistance there. So I need to adjust this for those levels. 195.83, forcing the price to enter into a new, we don't know if a downside momentum, but at least a new retracement from there, as expected for the shark pattern. Now the Dixie, I believe we were threatening at that point, at the point that I made my previous, and I shared my previous video, we were threatening the violation of this fractal resistance. At that point I know that I had patterns projected below, so I was expecting at some point a rejection of this daily fractal as a resistance, and eventually the market trading even lower. So it didn't happen. The market ends up breaking above the daily fractal, which gives sequence to another pattern that I shared before, but I'm not sure if I shared it on that video. Actually, I can't remember, but I shared these among other communities, and eventually on Twitter also. But bearish shark pattern or bearish golden Fibonacci extension level there at 94.54, also threatening the monthly fractal support level. And that monthly fractal support, of course, it was from March 2000, actually from this year, March. So basically we are now trading that first level, the first pressure level above or close to the weekly fractal, the 168 extension. Of course, as you know, the shark pattern can also extend to those Fibonacci extensions above 224, so don't get surprised with that. But for now we are threatening, and we are approaching the weekly fractal support, which is a very important price level, and forming actually completing that bearish shark pattern above. Shark pattern Y, false breakout below the previous structural lows, a violation of the previous structural resistance, extension above 161, bearish shark pattern. That's what we are facing at this point, with default targets for that pattern suggesting a deeper retracement for the Dixie from these levels. Also a potential symmetry in the three waves structure, kind of, and as we can see we are also approaching actually that symmetry, projecting the price at the monthly fractal, but as you can see we are now also approaching those levels. Gold, I shared that edge and shoulders above, breakout below the daily fractal, validating the pattern. Obviously default expectations for the pattern projected at 200% Fibonacci extension, as you can see, already achieved. And then or at least for now we have the weekly fractal support position there from August, and we are now threatening one potential, or threatening the let's say the reinforcement of one descending channel. So if that happens, we may see gold bouncing from these levels. Of course, as always, it's too soon to project these patterns, but again, the potential false breakout below, projected above, And since the market has achieved the 127% Fibonacci extension, I will target a retracement and not the extension level above. So if the price fails the 127 extension, and if the price finds support at or something between the 113% Fib and the 127% Fibonacci extension from this internal retracement, the very last retracement before the market prints a new low, if the price finds some pressure between the 113 and the 127 from this internal swing, I will search for the 161.8 extension from the very last swing extended above. If the market decides to target or to fill these Fibonacci extensions, so the 127 Fibonacci extension from this very last, or the first swing low, okay, the very first swing low, an extension to the 127, if the market decides to find support there, and then later I will search for the 78% Fib. This is the cipher pattern and not the shark pattern, so I will wait for that pattern to be formed there, and eventually reinforcing also that trend line resistance one more time. Obviously we never know what will happen there, but the cipher pattern will target the 38% Fib, so we may wait for something like a retracement and then the eventual recover from this price zone, or even more downside momentum. But the cipher pattern will suggest a retracement, which may put the price trading again back to 1910 or eventually a few points below, but retesting this price zone and eventually then later new highs. The objective is to trade above this structure because we want to search for more upside momentum for the metals in general. So that's gold, with obviously I shared that crab pattern projected there. There is also the possibility for that pattern to emerge there, and not only because on a daily, I shared this on Twitter yesterday, I believe. There's also the 38% Fib, a very deeper retracement for gold if the market decides to give sequence to this bearish bat pattern or the bearish alt bat pattern printed at 113% Fib. So let's see if the market will not target that 38% Fibonacci retracement level. Eventually, not without a retest of the previous structure highs. Let's see if the market will bounce from these levels. As I said before, I will not be surprised with that, but then later, ultimately, and we never know how long that will take, it can take weeks or even months to achieve those levels. That will depend obviously on the strength of the fall, if it's a point. But let's stay tuned to that possibility also. Let's not ignore that. But for now, I will not be surprised with the bounce for gold now threatening that trend line or that eventual trend line support, and filling some of the criterias for which allows us to identify then later patterns above. Let's wait and see. Very similar for silver. On a daily, I shared before, this shark pattern usually will target the 50% Fib. We are very close, or actually the most recent lows, very close to that Fibonacci level. This is a daily time frame chart, so 2076 is the default target. It doesn't mean the price will actually nail that Fibonacci criteria or that default expectation. We never know that, but that's what the pattern usually targets. No, let's wait and see also for silver, which has already achieved the default expectations, not only not only for these minor or lower degree edge and shoulders printed below, I shared it with you before, but also the major edge and shoulders. So let's wait and see again. If the metals in general starts to bounce from this price zone, I will not be surprised. Then we have oil moving sideways. For now, we have already a few patterns. At least for now, I have this pattern projected below at 88% fib. I'm not saying that I'm bearish, and I never know what will happen. I'm just saying that after a swing low and the sideways moving process, eventually I will see another swing low. Okay, I'm not saying the market will do that, because we can think the same thing here, because we have this very fast swing high and then a retracement, no? And this sideways, this can be all part of a correction for more upside momentum, okay, after the first swing. So let's wait and see. We have also the 200 moving average also supporting the most recent lows, even on a lower time frame. So let's not ignore the potential for crude oil for a bounce from this price zone. Okay, just because I shared this, or I projected this pattern here, I'm not so sure if the price will retest these lows again. Let's wait, but it's there, the 88% fib. If the market decides to, we already know what to do there. We have also the golden Fibonacci retracement here as resistance, acting as a potential resistance, which help to project patterns above, of course, 160-180 extension, which will guide us into the 127% fib. So, and in that case, we will face one bearish Gartley pattern at 127 extension, which can then later extend above, and if that happens, we will start to project patterns above, eventually 168 extension into a crab pattern. So if that Gartley pattern fails below the daily fractal, so if that daily fractal fails to hold the price below it, we may see eventually an extension above, and eventually one approach to the weekly fractal above, with a crab pattern projected a few points below. Let's wait and see. SPX, now I projected this eventual bearish bat pattern at 88% fib. At some point, once the price starts to approach these previous structure highs, I started to project the pattern above. As you can see, I just left that pattern here, because just for you to know that sometimes we expect something to happen which never happens, and we need to adjust and to adapt. And then later the market has synced into this golden Fibonacci extension. So I shared this pattern with you. Once the pattern completes, gets formed, actually at the same time that I shared the video, I believe we were already trading that Fibonacci level, and I shared with you the expectation for the bounce from this price zone. Default target for that pattern reached at 50% Fibonacci retracement level, and reinforced by the most recent fractal resistance there. We are trading below the daily fractal supports from these previous structural lows, and we should not get surprised if the price approaches these. Let me try to change this color. If the price decides to approach these 224% Fibonacci extension, 38% Fibonacci below, it's a major retracement from the monthly support to the weekly resistance. So this is a retracement measuring the potential for this downside momentum for S&P. So basically, if the price decides to fall below that fractal support, one last shark pattern at 224, and then if the market can't hold there, eventually even deeper pullback into 30-50 and or even further. So let's wait and see. The DAX heads and shoulders triggered below the neck zone, major pattern, the 88% Fibonacci retracement there, also the bearish bat pattern, default targets for the pattern as I shared before, 1136. On a 4 hours time frame chart, we can see another pattern can emerge at that same price zone, one eventual bullish shark pattern at 1143. So default target for the major bearish bat pattern 1136, 1143, the bullish shark pattern and golden Fibonacci reversal and potential extension and potential reversal Fibonacci level. As always, bearish bullish shark at 168 extension and eventually below the bullish shark extended at 224 if that is the point. More German DAX, bonds and bunds, nothing very specific at this point. I needed to adjust the structure. I was expecting this kind of a megaphone formation or something similar, but we are now moving actually nothing specific from here. I need the price trading above the weekly fractal in order to pay attention to these pressure zones above. If the price decides to break below, I need to adjust those levels below, and let's wait and see. Nothing very specific for bonds and for the bunds, which are both moving inside a corrective structure and moving sideways. The bund, it's a clear structure at this point. No, we are threatening again the daily fractal resistance. We have a new support there. We have the weekly fractal support, a major support, and this looks like a correction and eventually a breakout below this trend line support may offer not only a retest of the most recent lows, but eventually even deeper retracement for the bund, with default targets for that heads and shoulders printed above actually projected below the weekly fractal. So that inverted heads and shoulders requiring new lows, or at least a new lower low below the most recent one. And to finish with Bitcoin and Ethereum, I shared these as a potential another or more sideways moving process as a potential right shoulder for the Bitcoin. And that being said, we are for now trading. We're still trading below that weekly fractal. So actually, only trading above will force me to pay attention in terms of advanced pattern or in terms of harmonic pattern. Of course, the heads and shoulders and the eventual breakout below the weekly and daily fractal support, that may also trigger more downside momentum, with default targets for the inverted for the heads and shoulders at 79.50 and with a 38% Fibonacci right below those fractals at 91.82 as a potential Fibonacci pressure price zone. And if above the weekly fractal, we already know we have that bearish shark pattern completion point. Ethereum, very similar, not as an edge and shoulders, but now facing the 200 moving average, approaching one eventual. Actually, I need to adjust these. I need to adjust these into these lows. Ethereum exactly approaching one potential trend line support and the horizontal fractal support, weekly fractal support, but also the monthly resistance, so that may also turn support for Ethereum. let's not ignore the shark patterns territory between the 161 to 24. So basically we are now threatening the formation of this bullish shark pattern. Let's wait what will Ethereum present us. So everyone, I hope you enjoyed the video. If you have some questions, you already know where to find me. You have my trading view. I will put some links below the description in order to contact me if you need something in order or regarding those advanced pattern formations. I hope you enjoyed the video. If so, please press that like button. It's always amazing to see your feedback with that like. And well, all the best for you and for your families. Enjoy it, and see you in the next time.